Hi, this is Ken Watson. Welcome to a technical review of the week ahead. The intention here is to give you a video update in earlier part of the week, so this may be an ongoing thing on a Monday as opposed to I should or have been doing them sometimes on Wednesday. I'm starting to get out Wednesday afternoon, Wednesday evening. We've only really got 2 days of trading left, so Charlie and myself have agreed to switch it around. So Charlie's videos, Monday videos, will be on be on a Wednesday now, because they're less time dependent. Okay, so looking at the technicals, what I intend to do here is just run through some of the majors. I will be looking, I'll give you some extra details now, just to let you know on the blog here, under the video that you'll see that there's the pound dollar and the euro dollar, and I've just literally given you some key news events and then some key levels, and this is based on average true range of the weekly average true range of so these are the points of major resistance and support where we could see some price action and some obviously price possibly turning or resistance or good targets. So you've got the pound dollar and the euro dollar there. Within both, because the news from the US is obviously dollar side, I've included those. I mean, for example, in Europe, there's very little of significant news. There are some inflation figures coming out, but they're individual countries, and they have very little impact on the market and the euro anytime. So we're looking then at as I say, I've just taken from my perspective the most important news elements there. Just looked at the euro dollar and the pound dollar in this depth this week. I may look at other currencies depending on what's actually happening, but certainly for the pound, it's probably the busiest, another busy week, particularly as we move towards Thursday, and we've got the Monetary Policy Committee's bank rate. So we'll find out what the Bank of England are doing. And basically, I've already put here, analysts expect a 0.25% cut, so cutting it in half effectively. Now that should be pretty much priced in the market. That's what's expected. That's what the Chancellor of the Exchequer has said, and I think it's been pretty much well said elsewhere. So that's where we're standing at the moment. So looking technically at the week, then I would expect some consolidation possibly leading up to that day, but the volatility intraday has been good up until now, and it's mostly since Brexit and even before it. So I'm expecting the volatility to stay with us. Now, one thing I am seeing, and I've just sort of had a hint of, is an oversold sort of signal coming through from a weekly perspective on the pound there. So it's got itself pretty much oversold. Now that could continue onwards, and I'd be very careful trading on Thursday, looking at that, thinking, well, it's oversold. It's not going to go any further, because if they took some really drastic action, and the minutes from that meeting come out and were particularly negative, I would expect possibly a greater sell-off. And so, regardless of how oversold it is, how low an RSI figure is, or how much, or whatever your indicator is showing you, if the price is selling, it's selling. So nobody wants it, effectively. So the indicators go out the window. All we can look at is a bit of technical analysis here. At the moment, as I say, it's got quite stretched in terms of what we're looking at. We don't see RSI too often running down below the 20 area here. I mean, it occurs occasionally. Now, when it does, it can sort of sit there for a while, and we can, as you've seen before, it can move on. What we've seen here is quite an extraordinary move in a very short period. Generally, when we see that, it's like pulling the elastic band, and it retraces at least part of the way. Now, we saw that originally on the original Friday, where it retraced around about a third of the way, and I think it actually retraced more than that at one stage and then sold off a little bit later. So we saw a bit of a retracement, then we saw the gap down, and we've still got this gap to be filled, and that's a possibility and something to be watching for as we run through, because if it does start picking up, well, that gap becomes a bit of a target then. But at the moment, just a bit of a reassurance, actually. We're in a downward trend anyway. In fact, it's not. Perhaps this is if you look on a monthly basis and switch monthly chart and just look at this trend we were in, we're not massively away. We're about 2 standard deviations away from where the trend was sitting anyway. When you look at the regression channel between the prior high there and the current lows, or towards the prior lows, I'll put these lows back here. That's probably slightly adrift there. It should be down there, but you see we're still within two standard deviations. So yes, it's taken a hit, etc., but it's not over the top. It's not out of the completely unexpected. So statistically, well, yes, I'm seeing an oversold signal here. We could start rolling up, but likewise, as I said, with extraordinary news, extraordinary things happen, and we could become much more oversold. But this hasn't particularly sold off as much, well, as a lot of people suggested it would, but would do a long time ago, pre-Brexit. Anyway, I'm not getting all excited about it being overly long. When you look at the intraday price action and volatility we've got here, hardly going anywhere. At the moment, there's reasonable daily volatility, but in terms of direction, it's not given us too much of a clue aside of these candles. Now, I'm just going to switch and look at a shorter time frame, only because I want to look at the weekly pivots, and they're a lot easier to see on a 4-hourly chart than they are on the dailies. Now, this morning I was looking at the breaks of this trend lines that was sitting on here and possible movement to the downside. Now, we could still, so I'm just going to bring this into play a little bit where we are. Now, the weekly pivots, generally we stay within the range of the weekly pivots. There are times where extraordinary times when we come out of these areas, but we get pretty close to getting back in quite frequently. But if you research back on the pivots statistically, I'll tell you for sure that you'll find that their price stays within the R2, S2 for a large part of the point at a time, particularly on the weeklies here. So I'm expecting the range to stay within these levels. They're very key in terms of what price is doing. At the moment, we're below the weekly pivot, which to me still errs towards the bearish side. With everything we can see, it's looking, of course, it's looking quite bearish still, but it's always that question of when is it going to be making a turn? When's the trend line, the significant trend line, going to change? Now, we can be putting sort of trends on across using straightforward technical analysis here. Yep, sure, a break of that level would be seen as possibly a change of direction here, and the break of being above the weekly pivot would help as well. So all very significant. So really, I've become much more bullish when it starts running above the weekly pivot rather than it being below it. Last week we saw it never get much. Well, it peaked. It pipped across the pivot up a little while, then fell for most of the week and just stayed pretty constant thereafter. So if we can get back above this and stay above it would help, but get above the pivot, close above the pivot, I'd have a bit more of a bullish focus. At the moment, it's still erring. It's easier to be selling than buying whilst it's below it in the main. That's not to say there won't be intraday trades, but the trend for the week at the moment is still facing downwards. Okay, euro. Let's have a look at the euro, and well, let's come out of a 4-hour chart and look at the bigger picture first, and then run down. Trend-wise, actually, when you actually look at the euro and the bigger picture, this is just a weekly chart, and it's just something I did a while back, and it's always about 3 or 4 weeks ago, as you can see, because the price has stepped out the side of it. But we're in this very tight range between 0.05 and 1.15. If anything, looking at the shorter period within this, it's put a lower high in. It's from a weekly perspective, it looks weak. Coming back to the picture here on the dailies, just looking at daily again, looking weak at the moment. If anything, this too could sort of push back down. We are in this sort of wedge pattern. When you come to a weekly look back at this weekly here, there's the wedge that's sitting there. We've got the weekly 100 above us as possibly as the resistance sort of level to be watching for. But at the moment, a break of this trend line would suggest that we could be back onto that 1.05, heading back towards that 1.05 sort of area, at least part way there. There are, of course, plenty of support areas, which are key support areas, which I've listed on the blog. So that's the sort of the line for the ultimate bearishness. When you come back to the dailies then, actually, let's just look at the weekly. Look at the weekly pivots here. And you see we're below the weekly pivot at the moment. We flirted above it last week. It got below it, and for most of the week it was edging on the downside, and the sell side trades were much easier. And it looks pretty much the same at the moment. We've got these lower highs coming. Even Friday's spike high couldn't make any movement and push back up, or can close back up there, can't hold on to its gains. And at the moment, as long as it's below this weekly pivot, I'm looking at the bearish side of things. As I've already shown from a daily perspective, well, it's quite clear where we are here. in terms of this downward trend. Okay, euro dollar, sorry, dollar yen even. We've seen some significant movement here. In fact, if I change this to a weekly chart, we've done all of a week in a day, effectively. And this is interesting when a currency is been sitting there. Things have changed. The politicians have got a little bit more scope to do more now, and the Prime Minister and his team are looking like they're going to be relaxing things a little bit more. And we've already seen the yen move nearly 2 whole points there, so quite a significant movement up on the weekly basis from a daily basis. What's the possibility of this to continue? Well, it still hasn't broken the trend. The yen seems to move in, and it looks rather nice at times, and it starts moving up, and then all of a sudden something happens, and the risk comes off again, and it rolls over again. So it's been seen as one of those currencies which are possibly slightly safer than some of the others at the moment. So on that basis, it seems to attract money, and hence why we've been seeing this downward trend on the dailies. Break above the daily 21, I'd be much more bullish. Of course, it's at the moment it's looking relatively bullish from where it's sitting on the shorter time frames, and if it closes like this and starts Tuesday like this, we've got a bullish pivot swing here, which could see some continuation, which suggests continuation if the top is taken out. So looking bullish from that point of view. Just looking briefly at the pivots there, and we're not too far away from the monthly pivot there, which has got a reasonable probability of being hit, so that would be a good target. 21's already been hit, daily 21's already been hit, so that would be, as I say, a good target. Well above the weekly pivot. Now, this is the only one thing to watch out for in its trend. If it starts pushing up too high, it could be running into the R2s, R3s area where it could run out of steam, but that would be well above the monthly pivot. The weekly R3 sits nicely at the moment with the 200, 4-hourly 200, which may, if it continues like this, provide at least a temporary resistance. Now the pivots, well, not particularly pinched, but as I say, we've seen one hell of a move in a single day here. Maybe that won't push on quite so far going forward. May see some consolidation. Aussie dollar. Bit more bullish in some respects on the shorter time frames, but when you look at this daily mess, it really is a mess. We see a lot of large overlaps, and it pretty much sums up what it's doing. It's like trying to run through mud at the moment. It's really struggling every other day, or every couple of days it gets a bit of an upward movement and just can't really pull away from and make a proper upward trend. For me, I'm not that keen on trading at the moment. The range is not massively good. What's the average true range? Sorry, I'll just come back there. It's starting to drop back down. It's 95 pips again, but oops, over pressing the buttons here. I've overpressed it once again. I want the 4-hourly here. Let's just click on and show you the weeklies. Well, we're just sort of seeing a reaction and a counter reaction on the and it looks like it's sort of diverged at the highs here, and it's rolling back towards the weekly pivot at the moment. Reaction, how this stays, well, at the moment, short term, I guess, really I'm looking at the long side in general. Once it's hit the weekly pivot and reacts back, if it starts putting up, I'd be looking more towards the long side. And if the euro and the pound can also run up this way, it would be showing a bit of dollar weakness in that case, and we could see the Aussie benefit possibly slightly better. Canadian dollar, well, it's linked strongly obviously to oil, and we've seen quite a move in oil recently, but Canadian dollar has been consolidated for the last month. I say consolidated, range bound is probably a better word, the last month or so, ranging between that 1.31, 32 area and down the lows here at 126, 70-ish sort of area, 69 area. It's looking like it wants to go back up there and break that sort of area. Looking at let's just bring oil into play here. And you see oil's just rolling. It's put lower highs in. It rallied for a little while last week or the week before there, and it's sold off mainly again here, and it's looking at the moment like it could be heading down towards its a monthly S2, which in turn could push the Canadian dollar up further, particularly if there's any US dollar strength coming through here. Just look at coming down the time frames a little bit, and one thing it hit earlier on, actually coming down the time frame, but still looking at the weekly pivots here, but it did actually run into the weekly R1 earlier on today and reacted to that. It's now sort of running back towards the area, could easily push through. The R1 just was just fractionally above those prior highs there. So there's orders, obviously sell orders that were sitting under, probably been taken out. Where we're sitting now, there, as I say, there is a potential for it to continue pushing up. There's technically, actually, let's come back to the dailies here. And technically, well, if it pushes beyond the R1 area, the weekly, monthly R1 area there, with the next point of resistance really is that 200 moving average. So at the moment, as I say, looking more on the bullish side to me at the moment, if anything, but being wary of that monthly R1 could be quite key with the prior high there. Okay, that's pretty much it for me. It's not a lot to be added this week. As I say, there's look at the blog for some key data when it's due, etc., and also some other support and resistance numbers for the pound and the euro. Hope you have a great week. Bye for now.